Figures released by the Dubai Land Department show that Indians invested 5.2 billion dirhams in Dubai's real estate market in the third quarter of 2015, taking their total investment to 13 billion dirhams in the first 9 months. In the first quarter of the year, Indians, who once again topped the list of non-Arab expatriate buyers, invested 3.04 billion dirhams, followed by 4.76 billion dirhams in the second quarter. The third quarter, despite the slowdown in the market, saw more Indians buying property in Dubai, driven by the capital appreciation and rental yields offered by the local property market to international investors. Indians have invested 44 billion dirhams in Dubai's real estate market in the last 3 years, including 18 billion dirhams in 2014. The Emirates property market has been beneficiary of the Reserve Bank of India's move to increase the amount Indians can invest or spend abroad in foreign exchange without seeking its permission. The bank now allows Indians to buy property abroad, hold shares or debt instruments, or any other assets, or purchase gifts up to a limit of $250,000 per person per year. Looking at other expatriate groups, British citizens invested 2.3 billion dirhams in the third quarter, taking total investment to up to 7 billion dirhams for the first 9 months period. Pakistanis invested 1.7 billion dirhams in the third quarter after having invested 1.39 billion dirhams in the first quarter and 1.91 billion dirhams in the second quarter. The list of top foreign nationalities also includes citizens from Canada, Russia, China, the United States, France, and Afghanistan. In total, foreigners invested over 46 billion dirhams in the first 9 months, with 132 nationalities buying property in the Emirate. UAE consumer confidence decreased in the third quarter, according to the Nielsen Consumer Confidence Index, marking the second consecutive quarterly drop. The index measures perception of local job prospects, personal finances, and immediate spending intentions among more than 30,000 respondents in 61 countries. Consumer confidence levels above and below a baseline of 100 indicate degrees of optimism and pessimism, respectively. At 107, this quarter's reading is the lowest score for the country since 2013. In the UAE, sentiment about job prospects increased 3 percentage points to 65%, with personal finances sentiment and immediate spending intentions decreased 4 percentage points to 60%. And 4 percentage points to 43%, respectively, from the second quarter of 2015. UAE discretionary purchase intentions are high on the priority shopping list, including paying off debts, credit cards, and loans at 26%, spending on holidays and vacations also at 26%, new clothes 23%, as well as out-of-home entertainment at 20%. 44% of UAE respondents said that they plan to save spare cash, a decrease from 48% in the second quarter. UAE saving intentions, on the other hand, showed a slight decrease of 2 percentage points for investing in stocks and mutual funds, 14%, as well as 1 percentage point for retirement savings at 13% from the second quarter of the year. Regionally, consumer confidence decreased in 3 of 5 countries measured in the Middle East and Africa region, but increased 4 points in Saudi Arabia to 109 and 5 points in Egypt to 90. The 18th edition of the Abu Dhabi International Petroleum Exhibition and Conference will take place from 9 to 12 November at the Abu Dhabi National Exhibition Center. The announcement was made at a press conference earlier today, during which ADIPEC officials confirmed that the oil and gas industries continue to grow in the capital, as 144 newly registered companies raised the total number of oil and gas companies in Abu Dhabi to 1,467. The Director of Strategy and Coordination at the Abu Dhabi National Oil Company, Ali Khalifa Shamsi, attended the press conference and stated that ADNOC will be signing a number of contracts and agreements as part of its ongoing efforts to help meet the growing demand while ensuring efficiency and sustainability in all aspects. He also added that ADNOC will have a strong presence this year in 4 locations at the exhibition. According to the organizers, the 4-day event will be attended by international and regional ministers, industry chiefs, decision makers, and senior oil and gas professionals who will have a platform to discuss the challenges presented by the new energy landscape. They also added that this year's edition is 15 to 20% bigger than last year, and they expect to host more than 2,000 exhibiting companies, 7,000 delegates, and 85,000 attendees from more than 120 countries.
Really, ADIPEC is about a meeting place. It's about the world's industry coming together, how they face the current challenges, but how they look at new innovation and technology. But aside from that, we have some great additional programs this year. We have a great program called Young ADIPEC, and that's about getting young kids educated into perhaps a future career in the oil and gas industry. We're really proud of our Women in Industry event. We're seeing more and more ladies move up that ladder in the oil and gas industry. We have Vicky Haloub coming in, who's the current CEO of Occidental, one of the big American international oil companies. It's under the patronage of Sheikh Lubna, and that's really driving equality and diversity in the oil and gas industry. We have our big Middle East Petroleum Club this year, which is our big VIP space. We're bringing in non-oil and gas experts to speak for us. So we have Sir Ranulph Fiennes, the great British explorer, talking about leadership. We have a guy called John Dworkinski, who's one of America's most innovative thinkers. He created the Ice Bucket Challenge, and he's talking about innovation. And then we have the rock star of the oil and gas industry, Dr. Dan Yergin, Pulitzer Prize winner, who's really talking about the involvement in oil and gas and from an economic perspective, what that might look like in the future. But ultimately, ADIPEC is about creating long-term, sustainable solutions for not only us, but the generations that come after us, and that's really important.
The Middle East's demand for new aircraft will see carriers in the region invest $730 billion in new airplanes over the next 20 years, according to research by Boeing. The aircraft manufacturers said carriers in the region will require 3,180 new airplanes over the next 2 decades in order to satisfy demand, up from 2,950 it forecast last year. Boeing said 70% of the orders are expected to be driven by the rapid fleet expansion in the region by government-backed airlines, while 30%, or 960 airplanes, will replace existing aircraft. Boeing has based its predictions on its own annual current market outlook, which it uses to devise its strategy and its business plan. Ahead of Dubai's biennial air show next week, officials from Boeing were quoted in local reports as saying that single-aisle airplanes will command the largest share of new deliveries in the region, with 1,410 of the aircraft type in order. It was added that wide-body aircraft account for just under half of the region's new airplane deliveries over the 20-year period, compared to 23% globally.